Welcome back. While Galaxy Surfactants is buzzing in trade after reporting a strong set of Q3 numbers, the revenue is up 16%, profit after tax also is up 133%. They are largely on the back of improving supply side situation and also improved realizations as well. To discuss this and whether this bullish sentiment continues in Q4 as well, we have you, Shekhar, the founder, promoter and managing director at the company, joining us now. Mr. Shekhar, good afternoon. Thank you so much for joining us here on CNBC TV 18. It has been a good set of Q3 numbers. There's still a sequential decline that we have seen. Can you tell us how has Q4 panned out? Because you are talking about supply side situation improving. Is the worst over as far as margin decline and volumes is concerned for the company?
Yeah. So as far as Q4 is concerned, we do see India an encouraging geography. India, we have grown this year for the first 9 months by almost 7.75%. And we have progressively grown in India right from FY18 to FY23. If you see this 5-year period, we have grown on a CAGR of almost 8% in India. However, the Africa, Middle East, Turkey region has been a region of concern for us, where we have declined this year by almost 18%. The silver lining is that in this last quarter, we have grown quarter on quarter compared to the previous year's quarter. We have had a marginal growth in the Africa, Middle East, Turkey volumes, again led by the Egyptian geography's growth, the Egyptian country's growth. But we would like to believe that we have reached the end of the tunnel with respect to the volume decline, and we hope to grow in the coming quarters as far as the Africa, Middle East, Turkey region is concerned. The rest of the world, we have more or less been flat this year. There has been a minor decline, and we do hope that consumption comes back on the back of the easier raw material situation, both in Turkey as well as US. We also believe that there has been all the inventory corrections which were there in the previous year are coming to a close. Though US, there is still a bit of inventory correction remaining to be completed. And once this is over, on the back of a good raw material pricing situation, we would expect consumption to come back in these markets. So bottom line, India is doing well. AMET has been a source of concern, and we hope that the worst is over. And as far as the rest of the world is concerned, we again believe that consumption should come back on the back of a good raw material situation in terms of pricing.
Got that. In the first 9 months, on a consolidated basis, your volumes are down 2%. Your FY23 guidance when we last spoke to you was that it will be flat. Do you maintain your FY23 guidance of flat volumes?
We would like to at least level with last year's volumes.
Okay.
Let us hope so. We are optimistic.
Okay, so flat volumes this year. What about EBITDA per ton? Because you had guided for 21,000 to 22,000 rupees per ton. Q3 has seen a higher number than that. Will you actually surpass that, considering that raw material prices are easing now and freight rates also are lower?
See, the EBITDA per ton increase has come on the back of a one-time export incentives which we got in Egypt for a previous period. As you know, we account for the export incentives only when it is received in our books. So that we got almost 20 crores in the last quarter. Similarly, there has been an increase in contribution because of the exchange gains the rupee has depreciated against the dollar significantly, or at least by about 10% in the last year. Similarly, we also had certain sourcing gains, but as we say, we would strive to grow volumes in the coming period, and our EBITDA growth will be certainly ahead of the volume growth, and again the PAT growth, we would strive to be ahead of the EBITDA growth.
Okay. What was your current, the capacity utilization in Q3? And now that you expect Q4 to be a little better for you to meet that flat volume guidance, what could that number look like?
No, the capacity utilization has been around 66 to 67%. I don't think it will, be anything significantly different. Maybe 1% or 2% higher in there. But then this is the capacity utilization.
Okay, so capacity utilization at 66 to 67%. This time around, specialty volumes were impacted, and you said it's largely because of what the slowdown that we are seeing in the European region. Do you expect the slowdown to continue, and in that case, will the specialty segment continue to see an impact because of that? Will you make a shift in terms of your suppliers? Will you look at newer geographies, so to say, to take away the impact of slowdown that we are seeing in this particular area?
We again believe that we have seen the worst of consumption impact in Europe. We do hope that things will turn for the better in terms of consumption in the coming periods as far as Europe is concerned. Again, Europe has been able to very well cope with the winter. I do understand that the temperatures have started climbing up significantly even in a so-called winter period. So I would like to believe that Europe will turn for the better in the coming quarters.
Okay, so now that we are towards the end of this year as well, can you leave us with what the guidance for FY24 is looking like? EBITDA per ton, volumes, because you are seeing recovery across segments.
So as we said, we would hope to level with the volumes of last year, though we have for the 9-month period, we have seen a decline of almost 2%. But our striving will be to at least level the volumes of last year. Let us be optimistic as far as that is concerned. And as we said, we would certainly maintain the EBITDA per ton, accounting for any special one-time gains that we have seen in the last quarter.
Okay. All right, Mr. Shekhar, it's always a pleasure speaking with you. Thank you so much for joining us today and detailing Q3 numbers and the outlook for Q4 as well. We'll slip into a short break now and get you more on the markets and stock-specific action on the other side. Stay tuned.